live.
All right, Willow, we're back. Can't keep a good woman down. Can you hear me okay, Willow?
Big George, we're back.
All right, good.
I can hear you great.
Good. I think
Yes.
I think it was my my audio that was a problem. Hopefully we can get it fixed in the future. Anyways, so the letter that you wrote to your congressman, you're worried about future premium rises with the latest flood insurance bill. That's kind of where we were.
Yeah, and I'll go over briefly. Can you hear me okay?
Absolutely.
Is everything good there?
Absolutely,
okay.
Absolutely.
This letter was written on behalf of current and future Eastern North Carolina flood insurance policyholders, signed by Willo Kelly, president of NC20.
Right.
In bringing attention to serious concerns about HR 2874, the 21st Century Flood Reform Act, and that while they're good components of the legislation, which certainly address, as all are interested in, the sustainability of the program, the availability of the program, and the affordability of the program, there's some serious concerns, again, with fine print, as we talked about earlier, like as was in Bigger Waters. Section 104 right off the bat, consideration of coastal inland locations in premium rates, or consideration of coastal versus inland.
Okay.
I looked at this and I said, well, this sounds like a good idea on the surface. Why should somebody in Ohio, West Virginia, South Dakota be paying the same rate in zone-based elevation as on the Outer Banks, right? That's an easy step. Like, yeah, they should not be paying the same rate because, you know, if you're on the coast, again, here and the easy argument that we pay more on the coast than you already do. So him bringing this to Congressman Jones' attention, and he did say he shared this with Henserling and Waters, is that why is this in here? It's redundant. Unless you are familiar with the rating process and the mapping process, you would think that, yes, this definitely needs to be done. We need to differentiate risk based on coastal locations and inland locations. But what this says in this bill is that now FEMA,
right,
within 2 years, this legislation says that FEMA is going to come up with 2 categories of rates. They're going to come up with an inland rate. Now, if your base flood elevation 1 foot below in a V zone on the Great Lakes of Michigan.
So wait, hold on.
If you're coastal.
Hey, Willow, hold on. Basically, I know you like to get knee deep, and you're knee deep, but just for the lay person out there listening, is if you live on the coast, you're going to pay a lot more than inland. They're going to differentiate that. Is that correct in saying that, the simplified version of it?
Well, my concern is you better watch inland, because if they go to revise this on actuarial risk, catastrophic losses in the majority of the last few years, post Superstorm Sandy and Hurricane Katrina, the 2 anomalies that have occurred here with flooding events, we've seen flooding in South Dakota, in West Virginia. We've seen major flooding events inland. So this looks to me like it's a way for FEMA and the insurance companies to differentiate risk, to revise rates. Once they revise the rates, like we said earlier, you're going to pay the rate regardless of grandfathering. You're going to pay whatever rate they come up with. So why do they need to even come up with 2 different categories of rates when mapping determines your risk? Mapping is based on location. There is a coastal model to develop maps, and there is a riverine model to determine maps and base flood elevation. It's redundant. It already is happening. You are already given a base flood elevation and a zone based on your location, and the risk is the risk. Why in this legislation is it going to try to separate the risk even more? We are separated. Below base flood is below base 100, whether you're in Ohio, Mississippi, whether you're in Louisiana or in Dare County. 1 foot of floodwater is 1 foot of floodwater.
Right. So basically,
your mapping determines that.
So basically, correct me if I'm wrong. Actually, I believe Congressman Graves said the 4th biggest flood event was actually inland, in the Baton Rouge, greater Baton Rouge area, and that was an inland event. There was no storm surge or anything. And what they're trying to do
Right.
is basically, for lack of a better word, make an excuse to give higher rates to coastal properties. Am I correct, kind of?
That raised my eyebrows. That's my concern. That, again, is fine print. Explain to me why FEMA would have to come up with two categories of rates when we already differentiate risk. In riverine flood mapping, they map riverways. On the coast, they're mapping storm surge based on the 1 in 100 year flood risk. So the risk is the risk. This should just be eliminated from this legislation altogether. Don't let them get their hands on revising the rates again, because we're going to see possibly extremely higher rates than we are paying now. And it's not going to, and this has nothing to do again with, there's another provision in here, and I ask that it be clarified. While Section 101 of this legislation sounds good, annual limitation on premium increases, we're going to protect the policyholder from astronomical increases in their flood insurance premiums. If the rate changes, you're going to pay whatever the rate is. So that 6.5% or 5% annual cap on increases is not going to matter.
Well, number one, let's clarify some of the things on the flood insurance proposed bills. As of today, a homeowner will receive between a 0 and up to a 39% compounded yearly increase until they reach their actuarial rate, even if you're grandfathered. Is that correct?
This says that you cannot see any more than, I believe it starts out at 6.5% or 5%. But
not
it determined if you're pre-firm, there are different levels. If you're pre-firm, you're going to see 25% a year until this, and then it was 18%, and then the legislation.
Well, hold on.
Yeah, you and I know better.
I know, but let's explain this to everybody. Let's just explain this slowly.
Okay.
Currently, the way the legislation is, especially if you have an older home, a pre-firm home. Correct. And you'll explain to them what pre-firm is, but more importantly, these homes will see between a 0 and up to a 39.9% compounded yearly increase. And some people will see a $25 yearly surcharge, and the second homeowners and commercial property will see a $250 yearly surcharge. That's how it lays today, up to a 39.9% increase, correct?
Correct.
Okay.
Correct.
So now there's a bunch of good legislation, and the one you're talking about is only a 6% cap on increases. Is that correct?
Correct.
All right.
I think it's, I've got the bill over here and to go through it, but it does say that there'll be a cap on premium increases. However, if the rate changes, if they revise the rating structure again, you're going to pay what the rate is. So that does not apply. And if you're a pre-firm structure, that's not going to apply.
Okay, so explain to me what the grandfathering rate means. Does it mean if I'm paying $1,000 or $2,000 or $3,000 a year, it's never ever going to go up, or is it still going to go up and you're going to get to your non-subsidized rate eventually, whatever that number is? It's just going to take a while to get up there.
Okay, first to clarify, rates are not grandfathered. So when you say you're a new homeowner and you qualified for your mortgage because you could pay this amount, and that's based on your principal, your interest, your taxes, and your bing, bing, bing insurance. Your insurance, as we saw after Bigger Waters, could be 10 times more than what you qualified with your mortgage for. So it's scary in that grandfathering does not protect you from huge increases in your insurance in the future. Grandfathering only applies to your base flood elevation and the zone at time of construction, or at the time you got an elevation certificate and whatever map you applied that to at a certain time period. So the grandfathering is so that you're not penalized if the map changes in the future. Right. And as we've discussed, I mean, we all know if you're 1 foot above base flood, the higher above base flood you are, the better your rate is going to be. But if you go 1 foot below base flood, 2 feet below base flood, every foot below base flood you are to whatever map you have, got the elevation certificate to, it's scary the lower you are below base flood. So if you built and you were a foot below base flood and a new map comes out and shows you 2 feet below base flood, you're going to pay the rate still if you have continuous coverage. And hopefully everybody will maintain their coverage. Continue coverage.
So bottom line is, only if you were in an A zone and you're remapped to a V zone or a higher elevation will that be grandfathered in. But whatever you're at right now, your premiums are going to rise to whatever your actuary rate will be. Correct?
Right.
Okay.
Correct.
So now, do you know what a rate is for an AE zone home at BFE approximately?
If anybody could send me that information, I mean, there is a rating schedule. But again, there are a lot of variables when it comes into the rate. There is not a published rate that says if you're in an A zone and you're 3 foot above base flood, here's your rate. That's not how it works. Well, it would be great to simplify that.
Well, so I one of my pet hobbies is to collect FEMA rate sheets, which it no longer publishes, but I have a bunch of them. And these are directly from FEMA's rating sheets. If you're at the BFE, it's $832 a year, your actual rate. So if your home is built to compliance, it's $832 a year. You'll pay that, and you're going to pay your assessments and your primary or second homeowner fee, or whatever else you're going to have there. So that's actually not bad. But if you go 1 foot below, just 1 foot below, so if they remap your community, and like in my community, it was 6 foot, and now it went to 8 foot. Okay, so my home was at 7 foot. I was actually a foot above the BFE. Now I'm a foot below the BFE. Okay. So let's get back. If your home is at the BFE, full compliance, it's $832 a year plus whatever fees and everything tacked on. If you're 1 foot below the BFE, it's $5,632. 1 foot below, and then it goes up and up and up and up and up. We have actual flood insurance bills from Bigger Waters when people were going to the actuary rate. They have $12,000 flood insurance bills for a $120,000 home in Pennsylvania, a $30,000 flood insurance bill for a house in Long Island, a $65,000 flood insurance bill for a $250,000 policy. The home is never flooded. You know what I mean?
Correct.
So we know, look, I'm not an actuary, but a home that's never flooded with an actuary rate of $65,000 a year is telling me every four years this home is going to be a total loss. Okay, and that's not incorrect. And these aren't anomalies. These aren't like mistakes. These are occurring all the time, and that's the issue. So everybody needs to educate themselves on what their actuary rate is. And if you need help, we'll post those under this thread. We'll post those on Facebook, stopfemanow.com, or email us at stopfemanow.com, and we'll post those so you can see them. These are from FEMA.
Super.
We don't make these things up, so that's kind of it.
Yeah.
What other concerns do you have with the proposed legislation coming from the different bills and everything, Willo?
Well, pay for Section 507, pay for performance and streamlining costs and reimbursement. I think I mentioned earlier, there were about 90 write-your-own companies. These are the companies that came in when the federal government created the National Flood Insurance Program. When the private market said, and remember these words, too costly, too prevalent. Flood risk is too costly and too prevalent for the private market to cover it.
Right.
So that's why the flood insurance program was created in 1968. Tremendous flooding events in the United States in the 1960s. And people had nowhere to go, nowhere to turn to. They turned to their neighbors, they turned to family. So the federal government created the National Flood Insurance Program.
Right.
In the 70s, they turned it over to the insurance companies pretty much to administer and manage the program. These companies make 31.9% right off the bat. So almost 1/3 of every dollar you pay in flood insurance premium is going right to those companies as a so-called quote unquote allowance, commission, so to speak. In this bill, it says that allowance is going to be lowered 4% to 27.9%. myself and my colleagues have always had very strong concerns about how we are sustaining a program when 1/3 of every premium dollar almost goes just for the administration of the program, when, let's keep in mind, throughout the life of the program, in lost years, calendar years, only 1 to 2% of policyholders, and sometimes even less than 1%, ever file a claim. So these companies that are taking the 31.9% right off the top,
right,
are really only addressing 1 to 2%, less than 2% of policyholders. So if we're talking about 5.1 million policyholders, they're only looking at, in any given year, claims for less than 100,000. So the other 5 million that they're administering the policy for, they're only sending a renewal notice to.
Well, let me just take a step back. The commission that they're talking about that you stated before is a very valid commission, but one of the other things that has come up in general accounting office reports is that during higher claim years, like last year in the flooding in Louisiana, Katrina, Sandy, the insurance companies, because they have to oversee the claim, get up to 65% of all premium dollars. So basically, we're subsidizing the insurance companies. Okay, there's no cost controls in this program. If there's any subsidies, it's to the insurance companies.
What other industry do you know of that can, through legislation, be guaranteed not a reasonable profit, but a tremendous profit? Through legislation, they can lobby and advocate for higher rates and et cetera, of which they reap tremendous benefit. No other, during the downturn in the economy, I knew of no other industry that could go to state legislators or our congressmen and lobby to the extent that they saw tremendous benefit. When we saw the losses with Katrina, and granted, there was some, I think after Superstorm Sandy, there was actually some change made to how they were actually being paid on the claims.
Right.
There is a schedule. This 31.9% does not have anything to do with the adjustment of claims. There is a separate schedule that comes in because typically the adjusters are outside contractors that come in and adjust the claims. They're paid separate. That's a whole separate schedule that happens with the adjustment of claims. So therefore, high loss years, you're going to see 60 to 65% of total premium dollar that comes in being paid just to manage the program. I still look at this as saying, you know, we're trying to offer a fix here, but when you only get $3.3 billion in premium revenue, $1.1 billion is going out for commission. We're paying $400 million a year in interest-only payments on debt. Now we're looking at other things that are going to come out of the program to pay for certain things. How is it ever going to be sustainable?
Well, correct.
So
the number, and I'm sorry to interrupt you, the actual number is only 44% of our premium dollars, only less than half of the money that we pay goes toward paying of claims. In private industry, in homeowners and fire insurance and all these other insurances, 70% of what they take in goes and pays their claim. But in NFIP, because it's for whatever reason, only 44%. That 20-something% is a lot of money. It just that if we can just get to that 70%, the program will be almost sustainable, even with all the other issues it's gotten. But let me take a sidestep off this.
Sure.
And tell me, in terms of mitigation dollars, that all these what's currently put in the National Flood Insurance Program and future legislation, how much money are they talking about and putting in for mitigation every year? Raising dunes and building levees and stuff like that.
I'm not real clear on the total amount there and if it's coming out of the National Flood Insurance Program. I know there's a federal program through FEMA with elevating structures. You don't see a whole lot of money from the federal government now to build and restore dunes and beach renourishment as you did in the past, of which is a flood mitigation. It helps with flood mitigation. It's actually a flood mitigation kind of structure when you look at it that way, just like a levee.
Right.
However, in getting back to mitigation efforts, again, when we talked earlier about the flooding in Miami, cleaning out ditches and making stormwater runoff improvements, et cetera. That's all part of mitigation. I mentioned in a letter here that was just sent out today about stormwater runoff issues, flooding issues due from infrastructure. We've changed the natural hydrology of our environment. We've been doing that for centuries. And
yeah, but
it goes way back.
Willo, let me just take a step back. Let's just focus on the dollars.
Right.
And what I'm trying to get at is, everybody, it's a known fact that for every dollar you spend on mitigation, you will get at least $5 back. And there's some studies that say you'll get 10, 20, and even $40 back. So my issue is, instead of like, and I'll give Brock Long, he actually just said this publicly, instead of spending money post-dollar, after the storm billions, let's spend it pre-storm billions, and we're going to get, it's like spending 5 times or 10 times as much. As an investor, I would love to get 500 or 1,000% on my money, and our government does not want to do this, and it needs to do this.
But what do they do? Here is, and I know exactly what you're talking about. There is a blurred line between what is FEMA aid and what is due the NFIP policyholder that suffers a loss. And there seems to be a lot of confusion, and then that conversation gets very blurred in Congress when it comes to arguing, well, if you can afford to live in an area, that's close to the water, you can afford this, this, and this, when in all reality, we look at the losses that have occurred to people that do not have flood insurance that then get aid from FEMA. What's the dollar amount there of FEMA aid versus, the National Flood Insurance Program?
Number one, let me just go back to mitigation, and I'm going to get back to you on this. The mitigation, look, Holland spends about 3 or 4% of their GDP on mitigation efforts. They never flood. They never flood, and the whole country's below sea level. We have not made that commitment. Okay, whether you believe in sea level rise or don't believe in sea level rise, we are getting a little bit more flooding, and we have to fortify ourselves. That's a fact. And let's be proactive. And just like in healthcare, you go get a breast exam. So if you do have breast cancer, you can find it early, fix it, and move on, as opposed to letting it just kill you. Okay. And we're not doing this with flood insurance. So we need to call your congressman, because I'll give you just 2 examples. The city of Houston and the city of Miami, just Miami Beach, need billions just for those 2 communities. New Jersey just got $1 billion for their dune system. So we need hundreds of billions of dollars, and they're only allocating, I'll tell you right now, in these bills, $100 to $300 million a year. You can't even get a study done, number one. But number 2 is, and I go back to Congressman Graves, because I think he doesn't speak like a politician. He speaks like a flood advocate, okay? And bottom line is, in the greater Baton Rouge area that just flooded last year, he basically said there's been it's called the Comite River Diversion Project. It's been on the books for 40 years. They spent tens of millions of dollars on studies and everything else, and actually collected money for 40 years. Think about how much that land has appreciated in 40 years. This flood that would have happened, I'm not saying it would have happened, that's what Congressman Graves said, but it would have been much, much smaller, because a lot of the water would have flowed through this deep and widened diversion project. But my point is that we study all these things and nothing gets done for generations, and these problems are costing us a lot more. So that's the issue. What was the other issue you brought up?
With regards to the misconception with regards to flood losses and FEMA aid.
Yes.
And big misconception there that people see on TV and the Weather Channel, a community, and of course flood affects everybody. When you're flooded, it's everybody. But how many actual homeowners carry flood insurance where there has been flooding? How many actual houses, how many actual policyholders are there when you see mass flooding like that? Not every homeowner is carrying flood insurance. And what 1/4 of all the losses in the program are in X zones where you weren't even required to have it in the first place. So,
I believe that number is higher. We can argue whether it's 25% or
30
or higher. No, my understanding is that over 50. But I'll just give you statistics right now in Baton Rouge. In Baton Rouge, they're going to pay out about $1 billion to national flood insurance policyholders. These are people who did the right thing, bought flood insurance, flooded, and are going to get their money back, okay? So that's those. And that's only 20%, only 20%. Think about this, in Louisiana, as Congressman Graves said, you live in Louisiana, you buy flood insurance. But if you live in Louisiana, only 20% of the people that flooded had flood insurance. The other 80% did not have flood insurance. So now, $1 billion to NFIP policyholders who did the right thing. The other 80%, and I'm not saying they didn't do the right thing, they just didn't think they were going to flood. But the federal government comes in and just hands out on the first round of CDBG funding, Community Development Block Grant funding, to give to the people of Louisiana, and they deserve it, to help rebuild. But it's just a free check here, $1.4 billion, no strings attached. From now on, you got to buy flood insurance, okay? But my point is that what are we doing? We're spending more money to help people that everybody should mandatorily buy not only flood insurance, tornado insurance, hurricane insurance, and every other insurance. You can opt out, but you're on your own. Nobody should be paying for anybody else on this. I'm sorry.
And who pays for that? Who pays for that? This is where I get so frustrated with the argument that the National Flood Insurance Program is subsidized. It is not a subsidized program. When you hear about subsidized rates, other policyholders are paying a higher rate to subsidize the pre-firm policyholder that was there before flood maps were even developed, and they were given a rate, and therefore future policyholders are paying, so to speak, for that subsidized rate. No taxpayer dollars have gone into the flood insurance program. Now, if you want to talk about the debt was not forgiven. The federal government is charging interest on its own debt, its own program. They're collecting interest on. And in my experience, in communities that were given low interest loans from the federal government after a disaster, all that I know of, the interest was forgiven on that debt. So why have NFIP current and future policyholders and past been paying $400 million a year on interest? We're never paying down debt. That debt is always going to be used as an excuse for higher rate.
And that's the issue. So there has to be a common sense approach and basically say you can pay just what happened in Louisiana right now. And there's going to be more rounds of CDBG funding, but right now, $1 billion the federal government did not have to pay because NFIP policyholders were paying their premiums. So these guys did the right thing, and I'm not saying the other folks didn't. They just flooded, freak accident. I mean, you know, 1 in 1,000 year flood storm. But my point is, here's my best point. How is Senator Crapo come out with his bill and basically say, I don't want to do, in his bill, he's not doing any major reforms in flood insurance bill, but he wants a couple $2 billion for wildfires. But I have a question. Why don't people buy wildfire insurance? Why am I subsidizing wildfires? Why am I subsidizing? There's no crop insurance is federally subsidized, all of it. So we can do that in the Midwest where they don't really flood a lot, but they don't want to subsidize flood insurance. And by the way, you're correcting your subsidies. What's happening is the older homes, the high-risk pre-firm homes, are being subsidized by the newer homes in the flood insurance program. So there's about 1 million of high-risk homes, and the 4 million are subsidizing those people. The federal government has not forgiven any money. We've been paying our loans, just like the federal government has a debt to China and Japan and Germany and everybody else.
Thank you.
You know, and also, one thing I want to make very, very clear to everybody out there. This program is not set up for the billionaires and millionaires, okay? It's a $250,000 max policy program, okay?
Yes.
And please, if any senator or congressman says that again, it just shows the ignorance of these folks because
let's explain to anybody listening. If I can just get this out there, I will feel so much better. Argument, Tom Coburn, Senator of Oklahoma, I believe, would say, if you can afford to own a house on the coast, or if you can afford to live here, or if you have a second home, you should pay more. Here's what they didn't know when Biggert Waters was being debated. Did you know that if you have a second home NFIP policy, you cannot get replacement cost coverage on your structure. You will only get depreciated value when you suffer a loss. And do you know what that means? It means that you could have a house exactly like your neighbor. They live in it year round. You might have to rent your house out because maybe downturn in the market, you couldn't sell your house. So you have year round renters in it, or if it's a vacation rental home or whatever. The guy next door suffers the same loss you do. You both have the same level of water in your house. My neighbor is going to get full replacement cost, $20,000, say, heat pump, all that good stuff. If I have that rental home, year-round, short-term, whatever, I will get pennies on the dollar because the NFIP discriminates the policyholder based on ownership. Where's an attorney out there to say, what's wrong with this picture? The risk is the risk. Why, when I have a loss, I'm only going to get this much, but my neighbor who lives there year round is going to get much more? It makes no sense to me, and it's a poor argument, and it needs to end now. And if you hear of anybody saying, well, look what we're doing for these people that own second homes, they do not truly understand how the program works.
I agree with you. I will tell you, it's just another excuse to basically give people less and charge them more. So right. Just like you said, inland flooding versus coastal right. flooding, primary homeowner, second homeowner, there is no distinction. The premium, right. and then they're actually getting charged more, a surcharge more because
right. they're going up.
And I will tell you right now, I will just talk about the communities that got devastated here in the Jersey Shore. And my block, for example, pre-Sandy was 70% secondary homeowners. Yeah. As a realtor and a broker, I appreciated those dollars coming down here. One of the biggest industries or money makers down here is tourism, the Jersey Shore. And if these people don't come down here, and if these people are getting ripped off and they're being de-incentivized, if that's a word, to come down here, well, then that's gonna dry up a lot of money coming down here. That's a big problem. And you know, not for nothing, that is discrimination, and there's no need for it. And also, in all the Stafford Act and the CDBG dollars and everything else, if you talk to the second homeowners, they walk around with a complex like, well, I'm a second homeowner. Nobody helps me. I'm a second homeowner. Right. They're allowed to do this to me. It's like they're abused children. It's a shame.
Right.
There should be no differentiating anything with these folks.
Right. And I'm pretty passionate about that because I was very upset in finding out that no one was arguing that in Congress. Nobody was bringing that up. It seems that we just didn't know that. So, you know, that argument should have been squelched a long time ago that the second homeowner should pay more when they already do.
So Willo, so why are we here? Why are you and I here? How did we meet, by the way? Where was the first time we met? Where was the first time you and I met? Oh my
gosh, we met in Norfolk at a FEMA conference.
All right.
Yes, first time we met face to face. We had talked a lot prior to that because having, you know, similar passions with regards to what happened with Biggert Waters. And here I'm finding out this commercial property owner that's ran this motel was going to find out that his insurance was going from $5,000 to $60,000.
Are you talking? Wait! Are you talking about the Gypsy Motel in Florida?
No, I'm talking about a motel here on the Outer Banks.
Oh my God! I'd love to meet him.
A pre-firm structure. I said, you want to find out how much your rate is actually going to go to, your premium is going to go to, call and tell your agent you're selling your property tomorrow, and how much is the new owner going to have to pay. Right. And it took a couple weeks, and it came back and said, oh, that new flood insurance premium is going to now be this. So basically, you've got a piece of property. You don't have a business anymore. You can't sell your business. And we've saw other instances of where in that time period between Biggert Waters and the Homeowner Flood Insurance Affordability Act passage that we saw cash only deals where the market value dropped because of the huge cost of the insurance, in that people were able to come in and scoop up some properties and pay cash and not have an insurance requirement.
So Willo, the reason I get people who are passionate like you, and there's Willo Kellys and Georges across the country, whether they're homeowners, whether professionals like you and everything. And this is why I do this, is because, you know, I had a problem. They put my home in a V zone, and I did something about it, and my home was no longer in a V zone. Okay. they did a lot of stuff to me and people in New York and New Jersey after Sandy, and we stood up. And I understand. I will tell you something right now. FEMA doesn't understand science or common sense, but you know what they do understand? Political pressure. And everybody out there who is thinking about, I'm going to lose my home. I get upset stomachs when it floods. I have PTSD, and my government has done nothing. I'm waiting to get paid on my claim, and it's been 5 years. 5 years. Yeah. There's thousands of people that still haven't gotten a resolution on their claim, let alone get paid on their claim. And I'm not just talking about New York and New Jersey. We have people in West Virginia and Florida and everywhere else that have gotten underpaid on their claim. Okay, but that's besides the point. No matter what issue you have, it all falls under this umbrella. Okay.
Right.
And what we're trying to do is the NFIP program is getting reauthorized on September 30th. Okay.
Let's hope.
And, yes. Well, to be honest, maybe it lapsing will get actually Congress to do something. See, the issue is they're just going to kick the can down the road, and that's the worst thing that can happen. See, everybody's like, we can't let it lapse. You absolutely can let it lapse. You know why? They'll actually fix it instead of kicking it down the road. I mean, with all due respect to Senator Menendez, and he passed the best bill at the time with the Homeowners Flood Insurance Affordability Act.
Absolutely.
All it did was kick the can down the road. It was the best bill we can get. I don't want to kick down the can. I don't want to be doing this. This is not what I want to do when I grow up, okay? So everybody out there, when we're going to ask you to call your congressman, call your senator. I'll tell you right now, my congressman, a lot of congressmen in New Jersey, Congressman Marino, Congressman Graves, I can name you congressmen that have personally called me on my cell phone from other districts and other states that know me. But I don't know a lot of the congressmen. I don't know your congressman in North Carolina. And I expect all these people to work together as one and basically, hey, I have a problem. And my problem is whatever it is. And I'm a member of Stop FEMA Now. If you can't say that, or just say I'm worried about flooding. But my issue is that we have to speak as one. We're going to go to Washington at some point. We're finalizing plans to go to Washington and have folks, and hopefully you'll join us, Willo, and have folks from across the country, advocates and homeowners, to join us across the country and lobby Congress and basically say, you better fix it. Don't kick it down the road, okay? And what do you think about that, Willo?
It is going to take, I still believe, and that's why I'm so passionate about this and in talking to others about it, I still believe in the power of the people. And the power of the people can affect change. And I believe if we come together, not just when it hits our wallet and we get that huge, renewal premium that we're looking at, I think, we have to communicate and stand together and say, look, this is not acceptable. There are things happening here that are not acceptable, and we need to work together. And they need to hear from everybody. And people need to be engaged. They need to be informed. We need to be communicating the same message. And we need to make sure that members of Congress, I get so frustrated because it's just like, well, unless you have the solution to how we pay back $25 billion. And I was like, well, you only collect $3.3 billion a year. There's issues here with repetitive loss properties, mitigation efforts. Why don't we work on preventing future flooding events? And you got a $25 billion debt with absolutely no losses in the program for the next how many years it would take just to pay down that $25 billion.
Right.
We need to come up with a better solution. We need to come up with, in working together and seeing how people, and this doesn't affect the rich people. It doesn't affect those that are low income. In this bill, actually, there is a provision that says if you are below the poverty level and have to pay flood insurance, somehow money is going to come from somewhere in state programs to help you pay for your flood insurance. So, that's another thing like, oh, well, how is this all going to work now? There's got to be, we have to come together and we have to, let Congress know this is a priority for us. We're very concerned. It doesn't affect those people up here because you know what? People that have money can leverage equity to pay off a mortgage and not have to worry about the insurance, or they can self-insure. The people down here are not going to have to worry about it. It's the middle class homeowner trying to maintain a mortgage and a roof over their head that is likely supporting a family that this impacts the most.
Look, the louder you scream and the more phone calls you make, we're going to ask you to work. And your pay is going to be lower premiums, okay? Your pay is going to be more mitigation dollars for your community. I will tell you right now, I will give you the best example, and it is the senator from North Dakota, and she withheld her vote because her constituents said, we flood, but we also have tornadoes. So we want what's called a basement exclusion, meaning we're not going to lower, if you have a basement, FEMA lowers your elevation from your kitchen floor to your basement floor. Well, they do that in every other state in the union except for North Dakota. You know why? Because the people in North Dakota picked up the phone and called their senator. And that senator, I don't remember her name, Heidekamp maybe, she did a great job for her constituents. And I got to give her a high five. I'm going to give you a high five right there because she did what was right for her people. Okay. Yeah. Now I expect everybody who's watching this now and in the future to pick up their phone, write an email, write or whatever. If you have a question, please email us at stopfemanow@gmail.com. Go to stopfemanow.com and just read the threads and just call your call your legislator, fax your legislator, email your legislator, tweet your legislator. Let me tell you something. They will listen. I guarantee you. Am I correct in saying that, Willow?
You are absolutely correct, and I'm going to take it a step further. I'm going to brag a little bit about here on the local level in Dare County, the Outer Banks of North Carolina. Our preliminary flood maps, get this, unheard of.
Yeah.
Our preliminary flood maps for Dare County show base flood elevations going down almost 5 feet. Unheard of. No, we're not looking at higher base flood elevation. We're going to be looking at lower base flood elevations.
So wait a minute. So correct me if I want everybody to fully understand this. Okay.
Right.
FEMA
did not do our maps.
Wait. FEMA raised our elevation. Okay. Right. And I was required to raise my home. Okay.
Correct.
I was supposed to raise it. I was supposed to raise it 2 feet. I raised it about 10 feet because I know FEMA's going to come back. And we have members in our group, Eddie Duran and Lauren Futch from Massachusetts. They've raised their home 2, and now they're going on 3 times because FEMA keeps raising the bar. Guess what?
And typically, that's what happens.
Guess what Willo Kelly did? Instead of everybody raising their house in North Carolina, she lowered the BFE. How's that? You don't want to raise your house? Go to North Carolina. We'll help out. That's why she's on.
No.
Willo Kelly.
Willo Kelly cannot lower base flood elevation. This is new technology, LiDAR technology. It is the mapping that North Carolina has done in-house is now like a model for everybody else in the country. Exactly. So wait a minute. But here's what we're doing. On the local level because we know base flood elevations going down 5 feet. We know we suffer flooding from more than a 1 in 100 year flood event, that we've had events, 250-year events, 500-year events. The Home Builders Association here and working with local government is going to come up with a higher elevation standard for development and redevelopment because we want people to be prudent. We want people to look at the actual hazard that happens here, of which the flood map does not address, and that's standing water from heavy rain events, our high water table, et cetera. We're taking local control, and we're going to say, great, let these maps go through for insurance purposes, where 70-some% of properties are coming out of the special flood hazard area. I mean, we're surrounded by water here. Unheard of. And let them go through for rating purposes. We're gonna encourage as many people as possible to continue their flood insurance coverage, to get flood insurance coverage. But we are working to ensure that future development works.
Well, I just want to say you have.
I cannot get base flood elevation.
No, it wasn't. When I say Willow, it's the mapping
working
people
together.
in North Carolina. Yeah, it's the mapping people in North Carolina. They have this. It's the first program in the country where the state is allowed to or got funded to map themselves.
Yes.
And when I say Willow, I mean there's a team of people, and
we've been working.
Yeah. But I want to say,
thank you, George.
Yeah. But look, when I say that, I don't mean it literally. I mean it figuratively. Yeah. But what I want to get back to though is the reason you're on this call is you've been through this. You've been successful. Okay, you've been successful. I look at history. And you have a great history. That's why you're on this call. And I want people to understand the power of people who are successful. Let's follow. Let's not build a new one. You already built it. You and the folks in North Carolina built this great little system. The rest of us should, number one. Number two is, I just want to say, Helen Tommy Dore said about you, wow, we need you in Louisiana, Willow. All right, so
I need to visit. I need to take a visit, see some of my folks I just met at the on the national conference. I need to come visit Louisiana, as a matter of fact.
Yeah, no, they're good. I've been down a few times. They're great folks. So look, in closing, we're going to ask folks, community leaders, if you're willing to come down to Washington, D.C. and represent your community, please contact us at stopfemanow@gmail.com. If you're willing, as a community or as an individual, to contact your congressmen and senators about your local flooding issues, we will help you, not as a local community. I hate to say this, nobody cares about 1 or 2 or 50 or even 100 people, but they care about 5, 10, 50, 100,000 or more. And by the way, our group is bigger than 50,000. Our group is across the nation, and our group includes groups like, Willow runs a great group. I don't know what you want to call us. We're associates. You want to be my friend. I don't know what you want to call us, but we exchange information. We agree on a lot of stuff, and you tell me what kind of relationship we have, Willow, and I'll agree to it.
I consider you that you are a champion, and hats off to you, George, for everything that you've done in making people aware and educating folks. No, total credit there. You deserve it, because you have been a bull in fighting this issue and in getting people, more engaged and aware. I mean, tremendous coalition building that you've done, tremendous efforts in getting people in the various states involved. It's just been phenomenal watching what you've done here in the last few years.
I appreciate it. It makes those long nights and those long road trips worth it. Look, Willow, I think, and I will stress, please make those phone calls. We're going to ask people to make phone calls. We're going to ask people to come down. And Willow, I have a feeling I'll be seeing you sooner before NFIP Reauthorization. And hopefully we can make a big party and make some substantial changes.
Yeah, and I hope anybody listening today took away a few nuggets that if they hear information in the future, you got some facts now to have the conversation and to further the conversation about what we need to do here and how we protect that homeowner and keep that homeowner in his home. So.
Well, Willow, thank you for having us. Thanks for taking take 2. That first take was a little rough, and I'll be seeing you soon. Hopefully, we'll have you back on if folks want to have some more questions. Okay.
Lots of information and great talking to you, George. Thank you.
Thank you. Bye-bye now.
Bye.